Funding for Market Journal is provided by the Nebraska Soybean Board.
Animal agriculture is vital to Nebraska. Livestock production not only contributes to our food supply, but also helps our rural communities. Livestock provides revenue for schools, creates jobs, supports Main Street, and enhances the future for farm families. The Nebraska Soybean Board's Animal Agriculture Initiative works to encourage growth of responsible livestock enterprises to benefit agriculture and Nebraska.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Kate Brooks analyzes cattle and hog markets. Brad Lubben looks at policy issues in the beef industry. Thomas Mielke describes the global soybean shortage, and Jim McDonald discusses managing early wean calves. We're wrapping up National Ag Week across the country. Part of the celebration in this state is a new agricultural magazine to highlight Nebraska's largest industry. Nebraska Agriculture and You is a yearly publication designed to share information about ag with consumers. You might see the magazine at a local lobby or office in your community, but if you want to see it before your next joyful trip to the dentist, you can also read the magazine on the Nebraska Department of Ag's website at nda.nebraska.gov. UNL Extension livestock economist Kate Brooks is our marketing analyst this week. We talked with Kate Wednesday afternoon and began by asking about the rough stretch in the cattle markets.
There's a lot going on. We've had the drought going on. We're continuing to see some issues, on international export side of things. Drought playing probably the biggest issue, and then wholesale prices. In a way, we're not hitting some of those higher wholesale prices as we move forward. Plus, at the beginning of the year, we had a little bit higher supply than we had originally anticipated, more due to sizes of animals.
How tight is that supply right now? I mean, is it a concern that we know that the supply is a concern? We knew that last year because of the drought in Texas. Now it's spreading further up.
Right.
I mean, how big is the fear of supply?
It's going to be continued. We didn't see it as much as we originally thought we'd have seen it, and we're starting to see that tightening throughout the packer into the retail side as we move forward. And I think we're going to continue to see that through the summer as we continue to, not have as many cattle hit the market as we originally had thought.
This should be the time of year, we're approaching the time of year at least, when the cattle producers should be starting to make better money. What does it look like if you look at the break-even numbers? Are they starting to catch up?
On the packer side, yeah, we're starting to see improvements. Now we're still negative, but we're seeing those improvements on the packer side. The cattle side, we're still not seeing those improvements. We're still seeing those losses. A lot of that's due, we're still using the feed costs. We're still using that old corn, the harvested corn. Some of that relief, hopefully, we'll start to see maybe, we're getting into some of the planting season, starting to see what's going to happen coming forward on the feed cost side. So it's what's going to happen here in the future.
And the USDA numbers next week on prospective plantings could rocket that either way. Who knows what the market will react to there. But let's talk about the export numbers. We'll get to pork in a second, but for beef, and this might tie together here, but for beef, what are you looking at for the exports?
Right now, we've kind of seen some downswings on the export side. We've got a lot of issues going on the export side. We saw Japan open their borders up to 30-month on the beef side, which is a good positive, but we have some issues with the ractopamine, both for beef and pork, for China and
Russia.
Yes, thank you.
I'm Russian at heart.
Yeah. So we're seeing, some issues on that side of things. Plus, the other big issue is the value of the dollar. We're starting to see lower yens on the Japanese side, so it's making it even more costly for our products over on in international markets.
Your price forecast for beef, what do you expect here as we go forward and start to enter, even though it's 30 degrees as we speak, start to enter grilling season?
As we start to enter grilling season, hopefully we're going to start to see some of those prices go up. You know, we've been skating on that $2. We haven't hit that $2 wholesale box beef prices. We didn't hit them last year. There was hopes that we'd hit those. The hope is, again, this year maybe we'll hit those, and as we start grilling, maybe we'll start seeing more push of that beef through and pork through those retail markets.
You look at the pork markets, and it's really not much better. We saw that all-time high last year, and the export market was strong. Now, not so much. What's all playing into pork and the struggles it's had over the last month or so?
Again, you know, some of that's the export side of things, you know, dealing with the exports, trying to get product pushed through the market. On the retail side here in the U.S., you know, we're still not seeing it push through. Some of that's because we're seeing higher prices on the retail side. Some of that also, you know, the weather's playing a big factor. We're not getting out there going and grilling, so we're not seeing some of those uptrends in the markets.
What do you look at expansion numbers? Is that a possibility? If producers see that they have a gap here, if corn prices do take a hit, is there a possibility that the hog producer may expand? I do
think we might start to see some of those expansions on the pork side. Cattle, you know, it's going to take a little bit longer to get ramped up, but on the pork side, I think we're seeing maybe, even if they're losing right now, if feed costs will go down, that we could start to see increases on the pork side.
What about the consumer? What about the consumer who's buying meat for grilling, both in beef and pork? What do those prices look like?
Going to see record high in beef for sure, increasing prices on pork, even into the chicken side of things. We're just going to see higher prices.
Next week, we'll look at corn and soybean markets with John Moret from J.E. Moret Grain Company after the USDA releases its numbers on prospective planting acres and grain stocks. A preliminary report from UNL's Ag Economics Department shows Nebraska farmland values continue to climb at incredible rates. Nebraska's farm real estate increased 25% from February 1st of 2012 to February 1st of 2013. This year's all land value of $3,040 per acre is more than double the amount in early 2010. Even more noteworthy, all land classes gained in price: irrigated, non-irrigated, cash rent, and even the cost of grazing land across the state, all in a drought year, mind you. South Central Nebraska farmland took the cake in terms of percentage increase at 33%, but Eastern Nebraska farmland still holds the title of most expensive per acre at just less than $7,200. We'll link to the full report on the Market Journal website if you'd like to see more details. Later in the show, you'll see our interview with Jim McDonald regarding early weaned calves in 2013, but we also talked with Brad Lubben this week about policy issues facing the cattle industry. When we talked Tuesday, Brad thought there was a good chance that Congress would resolve the issue of furloughing meat inspectors as announced last week. And Wednesday, the Senate approved the move of $55 million from a USDA school maintenance and equipment fund to the Food Safety Inspection Service. The House passed the resolution Thursday. It now moves to the President. If passed there, the furloughs would be avoided. The other three issues we discussed with Brad are still in play and could have a noticeable impact on the beef producer.
Well, it's interesting. We can think of the beef industry in general, and we think of livestock actually in general as a sector that doesn't really look too much at policy, sort of looks to avoid policy issues oftentimes, but yet there's a number of policy issues here affecting the beef industry. Right now we have the issue of budget sequestration and the potential impact on meat inspection. We also have a recently announced proposed rule from USDA to address COOL, country of origin labeling, and to address the complaint and the ruling from WTO that was originally filed by Canada. We have continuing issues with disaster assistance and lingering concerns obviously over drought outlook in 2013 and the role, if any, of federal disaster assistance to cover both losses in 12 and potential losses ahead in 2013. And of course, the beef industry is always watching EPA as well, and wondering about the regulatory front there, concerned about a recent release of producer information as part of a Freedom of Information Act request. So a number of issues on the radar for the beef industry.
Let's talk about COOL, World Trade Organization, and the COOL, the country of origin, country of origin labeling, had a little disagreement about what the U.S. would label or how it would label it. Give me the background of that.
We back up a decade to the 2002 Farm Bill. A very strong country of origin labeling package of legislation was proposed and was eventually implemented after the 2008 Farm Bill revised some of the regulations. The 2008 Farm Bill sort of helped streamline the implementation of what was originally proposed in 2002. Now, Canada filed a lawsuit in the WTO claiming that cool was illegal. It violated trade rules. It harmed the Canadian beef industry. WTO agreed. Now, in the agreement, USDA has to either come up with a solution, a fix to the rule, or face potential retaliatory sanctions. USDA just announced their proposed fix to the country of origin labeling rule, and instead of, as some might have expected, helping to sort of streamline and ease the rule further to satisfy Canada, in fact, they reverted largely to some of the original legislation from '02. Very stringent rules on what should be labeled and how. A much more costly implementation of cool, if it is to go through, not clear yet whether that resolves the complaint with Canada.
Clear how it affects the producer? Is there a big impact?
It certainly could affect the producer. Instead of allowing the processing sector to essentially commingle livestock from multiple sources and then label the product as commingled, we return to what one of the original rules said, that says muscle cuts. Think steaks, roasts. They have to be labeled as to exactly where they were born, where they were raised, where they were processed. That means not only that does the label have to say more than it currently says, it means that the whole processing sector has to deal with much more segregation, and the production sector as well, much more segregation and record keeping than what they currently do.
Where do we stand with disaster assistance currently? That was a big topic last year during the drought. There was nothing in the Farm Bill that addressed that. We have a 1-year extension of that Farm Bill. Where is it now?
Right now, we're still waiting for potential funding for disaster assistance. There was proposed disaster assistance in the Farm Bill proposals last fall. Obviously, those didn't go anywhere. And when the tax legislation, the fiscal cliff legislation, did address tax issues and included a 1-year Farm Bill extension, it also technically included a reauthorization of disaster assistance retroactively for 12 and forward for 13 to cover those livestock losses like forage losses and indemnity or death losses. Unfortunately, that legislation was authorized, not funded. So here we are waiting on potential appropriations or waiting on a new final eventual Farm Bill that includes both authorization and funding before we can expect to see any disaster help for livestock producers.
And give me the disagreement now quickly between, well, maybe not between, but because of the
Right.
EPA.
Well, of course, when the livestock industry is watching DC, they spend quite a bit of time watching USDA. They also
Yes.
spend quite a bit of time watching EPA.
Yes.
And when they watch EPA, they're looking at all these potential rules and the concern about the rules or the regulatory burden of those rules. Well, now they're also concerned about what, in essence, was an information release from EPA. EPA had gathered information from multiple animal feeding operations relative to some proposed regulations. Even when those proposed regulations were determined not to affect some of those operations, they already had that info on those operations, and through a Freedom of Information Act request, several environmental and interest groups basically took or asked for, requested, and received that information. So it's not that the information wasn't officially public once it was with EPA, but technically speaking, it was data that EPA didn't need to collect because these were operations that didn't fall under the purview of EPA. And now, once they have the data, now it's been released.
We'll have more with Brad in a few weeks as he re-examines enrollment in acre and direct and countercyclical farm programs. At our recent trip to the World Soybean Research Conference in South Africa, we spoke with Thomas Mielke, who's the director of Oil World in Hamburg, Germany. Thomas spends most of his time analyzing the supply, demand, and prices of oilseeds, including soybeans. One of his main topics during his speech in Durban was how the world is currently facing a major soybean shortage.
This volume problem is quite significant, and you know, you can see this if you look at the U.S. soybean disposals. They have been record large. Exports of soybeans, crushing of soybeans, exports of soybean meal, record large. Until January, even February was a high month, and the result is that U.S. soybeans will be reduced by 11, most likely by 12 million tons from a year ago at the end of February. Front-loaded disposals of soybeans in the U.S. because all other countries in the rest of the world did not have enough soybeans. So front-loaded crush in the U.S., minimum stocks at the end of February in the U.S., and the world is shifting to South America. Big question is, well, we have a good crop on paper, a little bit less soybeans in Argentina because of drought, but the big question is, can these beans be shipped in a timely way to satisfy world demand, or, and this is very likely that we have a lot of soybeans on paper, but infrastructure deficits and lack of farmer selling in Argentina results in smaller than required monthly exports of soybeans and products out of South America in March, April, May, June, keeping the volume problem intact.
The demand, what do you look like, if there was a chart, a 10-year chart that says what demand you think will look like for soybeans, soy oil, soy meal, what does that chart look like?
Longer term, 10 years down the road, of course there is a potential to solve this. High prices normally take care of itself. High prices help to promote production, and this is likely to happen. But we have to make the homework. We have to solve the infrastructure problems. Problems in South America, particularly, but also in other places, so that actual exports can satisfy demand in the future.
What about for South Africa here? When we told people we were going to a conference here in South Africa, they asked how widely grown soybeans were in South Africa. Can you paint the picture of maybe the beginning and where they are now, the growth in soybeans that they've seen?
Oh yeah, quite a success story for South Africa here. Starting from scratch, very small, 0.1 million tons produced 10 years ago. Now they have almost increased their soybean production by 10 times over the past 10 years. Close to 1 million tons likely to be produced next year, probably slightly more even. That is a success for them. Although very small in the global perspective.
What about Africa as a whole? Is there a growth market for soybeans here?
Yes, there's a good growth market in the feed sector as well as for food. The food industry also requires rising quantities of soybeans. Both have good growth potential. In all over the continent, not only in the Republic of South Africa. Population is rising fast. We shouldn't forget this. This is still a factor which drives demand in the coming years.
Our full interview with Thomas is available on the Market Journal website. You can learn more about Oil World and its reports online at oilworld.de. Normally, skipping a row of corn at planting would mean a planter malfunction, but in the March, Nebraska Farmer, you'll read about skip row corn planting as a management practice for dry land producers in drought. University of Nebraska-Lincoln Extension crop specialist Bob Klein has studied the practice for nearly 10 years and has found that for western Nebraska, the practice can increase yields by up to 40 bushels per acre in a drought year. But Klein emphasizes that planting into adequate residue cover and good weed control are important in skip row planting. You can read more about his research in the March, Nebraska Farmer. We talked about it last year, and unfortunately, we're covering it even earlier this year. Because of drought, beef producers may be forced to wean calves earlier than normal. The hope would be that with pastures less than perfect, early weaning would allow a farmer or rancher to keep as many cows as possible. We talked about the process with Jim McDonald Wednesday in the R.B. Warren Arena here on UNL's East Campus.
Well, the industry standard for weaning calves is between 6 and 7 months of age. In fact, weaning weights are typically adjusted to a 205-day weight. So theoretically, anything before that time could be considered early weaning. But any time from, if you're in the dairy industry, about 6 weeks of age, up until our normal weaning time could be considered early weaning.
Is it successful? Can it be successful in the beef industry? Can you take what the dairy industry has done or perhaps what other states have done and make it successful?
Right. So we've got good information down to about 65 days of age. So the dairy industry would use at 6 weeks would be a little bit prior to that. But about 65 days of age and 165 pounds, we've got data in the scientific literature that demonstrates that that can be done successfully.
Describe to me, you were mentioning in your recent article in the Nebraska Cattleman magazine, when you talk about early wean calf, you have to look at the rumen, because that's somehow in the definition of how you would define an early wean calf. Describe that.
Okay, so most people recognize that the ruminant is different in that it has 4 compartments to its stomach: the rumen, the reticulum, the abomasum, and the omasum. Okay, so the abomasum is like our stomach. The other 3 components are unique to the ruminant. Early on in life, up until they're about 60 days of age, that makes up a relatively small proportion of their total gut, about 30%. Then as they grow and get closer to our normal weaning, that the rumen, reticulum, and omasa make up closer to 75%. So there's a lot of development right in that range. They're not able to handle forage like a normal ruminant would up until they get closer to that 6 months of age. So we need to think about early weaning within the context of where the rumen development is at between the time that they're about 60 days of age and 6 months of age. Early on, our recommendation would be to feed a higher concentrate diet because they aren't able to handle as much forage compared to a normally weaned calf.
In that way, how do they relate to a high-risk calf? You also wrote about that. How would that comparison be?
So it would be increasingly common in Nebraska and in the southern plains to transport calves from out of state. The southeast part of the United States, wherever they might come from, long distances, those calves may have been commingled with other calves, may or may not have received an appropriate vaccination protocol, and so their risk of becoming sick is greater than a ranch source calf that may have originated here in Nebraska. Our tendency, or at least my tendency, would be to treat an early weaned calf similar to how I would want to treat a high risk calf. And often what that means is we've got data to suggest that feeding a high forage diet, a low energy diet, improves the health of those calves. Okay, so that's exactly the opposite strategy that we might want to take with an early weaned calf because of where they're at in rumen development. Additionally, because we're dealing with a drought situation, especially here in Nebraska, many of those calves may not come from that far away. They may have had good vaccination protocols prior to coming into the feedlot. And so the more you know about that calf, the better you're able to develop a management strategy for it.
Is there a drastic difference in nutrient requirements for those calves?
Well, they're growing very, very rapidly, and so the energy requirement is going to be greater than it would be for a normally weaned calf relative to its body size. Again, providing a higher concentrate diet provides the energy that it needs. It's also probably going to need a higher crude protein content. We may be up in the 16% crude protein range to meet the requirements of that calf, and then a minimal amount of forage. They're not going to eat very much, and so typically we're worried about ruminal acidosis when we're starting calves in the feedlot, but the low intake should limit the risk for ruminal acidosis as well.
With that said, what is the expectation for the performance in the feedlot?
These calves, because they're growing very, very rapidly when they're young, they're putting down a lot of muscle, not a lot of fat early on in the feeding period. They will be very, very efficient compared to a normally weaned calf or compared to a yearling, which is what we're historically used to dealing with here in Nebraska. And so once you get those calves into the feedlot and you get them straightened out, you have a tremendous amount of flexibility. Theoretically, you could put them into a forage system. You could take them back out onto pasture and grow them into a yearling. This particular year, if we had the forage, we probably wouldn't expect to be dealing with huge numbers of early weaned calves. So my expectation is that many of those calves will stay on feed throughout the feeding period, but I would anticipate that they would be very, very efficient during that time, have relatively low dry matter intakes on average through the feeding period, and they'll fatten at an earlier age, which means that we'll probably have slightly reduced carcass weights compared to what we would normally be used to.
Snow began falling in Lincoln early Thursday morning, with more in the forecast for the week's end. Now with his first outlook of spring, here's UNL Extension state climatologist Al Dutcher.
Well, folks, here we are again for the weekly forecast. Of course, we have a major storm moving across the Central Plains this weekend, and we'll get to that here in a few seconds. Let's take a look at what's happened during this past week. Of course, the cold air remained firmly locked in place across much of the upper Midwest, and that included most of eastern Nebraska. We've seen several waves of energy move through, each one progressively stronger as we got into the midweek period. And we did have scattered areas of snowfall accumulate into the Thursday morning time frame and, of course, into the Friday morning time frame. But most importantly, the snowstorm is starting to get its act together across east central portions of Colorado and northeastern Colorado, and is expected to slide eastward as the day progresses and increase the dynamics across the southern 1/3 of the state in terms of snowfall potential. So let's look at the upper air models and see how we'll see the storm progress and what may be the potential for accumulating snowfall as we go through this next 24 to 48 hour period. And as we go to the upper air models, here's this upper air low, and the associated surface low is slightly to the north. It's going to be moving through western Kansas and then eastward and then digging up toward the Ohio River Valley. So we're going to see snow, and we've already started to see it break out across the southern 1/3 of the state, particularly in the southwest corner, and that should fill in as we go eastward in time during the afternoon hours. And once we get into eastern Nebraska during the overnight hours, that's when we'll probably start to see the snow pick up. Now, accumulations are going to be a little bit more difficult. Right now, with possibility right along the Kansas-Nebraska border in southwestern Nebraska, probably in the area of 6 to 10 inches might be likely. As we get eastward, it really boils down to the temperatures, and right now it looks like we're shooting at somewhere between 3 and 6 inches. But once you get north of the I-80 corridor, I think the snowfall totals will drop off rather dramatically. Now, as we go into tomorrow, that system will rapidly move toward the east, but it's going to have some energy lagging behind it, and that will result in scattered flurry activity, particularly across eastern Nebraska. And by the time we get into Monday, you'll notice that there still remains some residual moisture, so I wouldn't be surprised that we'll see some light snowfall accumulations along the southern 1/3 of the state. Unfortunately, where we really desperately need to cross the northern half of the state, it doesn't look like we're going to see significant amount of moisture out of this system. Then we start to see much clearer and calmer conditions building into the Central Plains under a northwest flow. Looks like fairly sunny day on Tuesday, and that will continue into the day on Wednesday. And we might see some slight warming temperatures, and we'll have to watch for this little pivot of energy kind of moving toward the southwest to bring a little bit cooler conditions as we get into the day Thursday. We'll see that time to press against northeastern Nebraska. That looks like the best area to see some potential flurry activity as we get into the Thursday evening time frame. And then as we get into Friday, we're going to start to see a low pressure system coming into the western United States, and depending on how fast it moves, it could move into the Central Plains as we get on to Easter Sunday, and then hold around into the region for a couple days after that, and there is a potential for some significant accumulation. So let's take a look at the temperature forecast, and we'll see the temperature going to remain cool for this time of the year with a warming trend toward the end of the week. The major precipitation in this forecast is centered around this weekend, and again, we'll have to pay attention to some accumulating snowfall, and it could be significant across the southern 1/3 of the state. Now, as we go to the 8 to 14 day forecast from next Thursday to the following Tuesday, we are looking for broad-based cooler than normal conditions across most of the eastern United States. In terms of precipitation, they are projecting below normal precipitation, but I believe that that's way underdone. This system's coming out looks like it has the potential to drop some significant moisture across the Central Plains as we get into the Sunday through Tuesday time period.
Thanks, Al. Our interviews from this show with Kate Brooks, Brad Lubben, Thomas Mielke, and Jim McDonald are all available as part of the March 22nd episode of Market Journal on the show's website. Next week, John Moret will talk with us after the USDA releases its prospective planting numbers. UNL Extension irrigation specialist Bill Kranz will show us how farmers can ensure their irrigation efficiency before putting this year's crop in the ground. And UNL Extension Ag Law specialist Dave Aiken will explain proposed state bills regarding animal welfare. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now.